Okay, so we're looking at Eurgbp EG for our trade today, which ended in a 1.66 R. And so to understand this, we're going to go to the 4-hour time frame, and we're going to see the price was moving downwards, having these lower highs and lower lows, very bearish order flow until about the beginning of May, and we see that there was liquidity here on the impulse leg up with these ascending lows, and we take note of the reaction of price in those areas of liquidity situated here, situated here, situated here. And so we see that price came down into this area and reacted to that with this bullish order flow. However, its descent down into that area was a bit too impulsive, and so zooming out, bearish order flow was still in control, supply was still in control at this point, and so we had to wait until about the second week of May when price finally got out and broke this fractal high situated over here, and that would be the fractal high because that would be the last high before this liquidation that happened over here that liquidated some liquidity here on this impulse leg, resulting in a reaction from that. And so we see that price tried to come up here. I just want to take note of this. On the 11th of May, price tried to come up here on the 4-hour time frame, but didn't really close. So we can see that this was a fake out right here, leading to this downward movement and getting some liquidity internally before coming back up. And so we see that it came back up and broke beyond that fractal high, changing character. We have that external liquidation. I would count this as internal liquidation, followed by a break of that previous fractal high, changing character, creating a new invalid area of demand here on the 4-hour time frame. And so from there, we would be looking for possible retracements back into that 4-hour demand in the 1 hour. And so if we zoom in on the 1-hour time frame, we'll see that the liquidity that was left behind would be situated over here and over here. And so these are the only two places we want to look at for any reactions back into the upside. And so we see that price came back down on the second week of May. And then when it went down there, we see some very impulsive bearish movements. So we had to be careful there. But after it liquidated this area of liquidity, it started going up, and there was some fractal structure that was present here in the 1 hour. And so this is the refined version. In the 4-hour, this would just be one candle. But nonetheless, we're looking at the fractal structure here, moving on, going up, breaking that structure. Not too much internal liquidation there, more of external liquidation reacting to this area of liquidity. And we see that price came back up following that liquidation, coming up, breaking that immediate fractal high, changing character, and creating a new invalid area of demand in the 1-hour time frame. So we see that price come up, and we'll be looking now for possible retracements back into that area of demand in the 1 hour. But as you can see, there was not much liquidity that was present there in that movement up that broke market structure. And so we can rely once again on our Fib retracement tool. That will be our swing low, this will be our swing high. And we wait until it came back down into 0.5 Fib, and this would be our entry situated over here. And so after an overnight wait, some consolidation happening here, but nevertheless price respecting that demand that was created, tried to go up here but couldn't, went down there and liquidated these range lows before finally coming back up, and with that very aggressive move back into this swing high straight over here. So this was a 1.66 R. Expecting this to move higher, but for the meantime, this would be a safe exit, and that will be it. Fundamentally speaking, this is also in line with some of the UK news that's going around. We have some political instability that's happening right now in the UK, with some members of parliament challenging the Prime Minister, creating some political unrest at the moment, as well as some trade deficit that's happening in the economy, with more reliance on imports than exports, which contributes to the weakening of the pound. And so that, in line with the technicals and the fundamentals, this would give us a good trade for Euro GBP.